if you're brand new to trading and you don't know what a profile is and how to trade a profile, in this video I'm going to show you exactly how to trade a profile so you can earn money on a daily basis using professional trading tools like I do. I've been trading for 20 years. I'm going to show you exactly how to use it right now, so stick around and I'll show you how to trade using professional tools. Now let's get started. So this is a profile, a daily profile, and this is a daily profile. It's also referred to as a TPO, which stands for time, price, opportunity. Okay. This profile is Friday's profile, and this is today's profile, which is Monday the 12th of May. Okay, so how do we actually trade profiles and what does a profile represent? So the best way to explain it to a newbie is each one of these blocks, as you can see here, each one of these movements is in effect like a 15-minute candlestick. That's the best way to explain it. Okay, so when you see candles that, if you're using something like TradingView or something like that, most amateur traders use, this is organized in such a way where it gives you the correct data and the correct levels to trade from, which you can't see on candlesticks. Okay, I'm going to explain that in this video. So as we can see, this being Friday profile, okay, and this is today's profile, Monday. Excuse my writing because I'm doing it with a mouse. Okay, so this morning, this information was already printed. Okay, so this is not lagging behind like a retail indicator. So what I look for when looking at a profile is I look at these black lines. I can hear you say to me, what is these black lines? Okay, this black line here is classed as a value area high there, okay, and this black line here is classed as a value area low. Okay, so what does it actually represent? So what it represents is, in this particular day on Friday, in between this black line here, the value area high, and the value area low, this is where 70% of the transactions took place on this particular day. Okay, so when I wake up in the morning, I see where price is opened up at. So we can see here on this profile, this opens up at 10 p.m. on Sunday evening, okay, for context. So we can see this value area high here, and we can see this value area high has been respected a number of times. You can see it's had probably several attempts trying to break outside of this value area. Okay, so how do we actually trade, and what is the expectation? So auction market theory, obviously you don't know what auction market theory is, but I'm going to explain it to you now in this particular example. So when a profile, so the following day, opens up inside a previous profile, so a previous daily profile in this instance, so this is Monday, sorry, this is Friday, excuse me, and this is Monday, is when price opens up inside a previous day's profile, so we got the value very high here, okay, expectation is to go to the other side of value. So the other side of value is this area here. So this is the value area low for context, and this is the value area high. So what we look for is prices traded up through Asia and been in a small range like this, consolidating. When we get a small range overnight, the expectation is to go in balance. So what is imbalanced? Imbalanced when the market goes in one direction very, very quickly. And we can see that here. So this is the consolidation in Asia, and we can see we've sold off all day. We've actually gone lower than this VIA area low here. But in this example, I'm going to show you how to trade a small consolidation with expectation to go imbalanced to the other side of value. So all we do, in effect, is wait for price to come to this VIA area high here. And when I got up this morning, it was around about here. I get up around about 5:15, and we can see several attempts trying to break out of this VIA area. Okay, so the trading opportunity is for when price comes back into value, breaks this area here, because this is where a lot of retail traders are getting long here. And we can see, because we've got a profile here in this VIA area high here, using my custom profile, it doesn't want to break out of this area. It's not happy to go any higher, because we can see it's had several attempts trying to go higher. So we wait for price to break out of this lower area here, where we know retail traders are going to have the stops in this area here. As soon as price breaks this low here, we take a trade to go short. And where do we close it? So we close it at the value area low. So the trading opportunity is waiting for this consolidation to break out. Take all the stops. We know the stop's going to be here. So what happens when the stops get taken? Well, if you're placing a stop loss here, or just under this here, and you're in the market, what's going to happen when price breaks this area? All the stops are going to be triggered. So all these buyers then become sellers. So that's why we have a big acceleration in price like this. Okay, and if price comes into this value area here, so this is value area low again, this on this profile, this value area low here, this black line. And to trade the opposite way, what we do is we wait for price to come back into this value area low and go to the other side of value. And this is the other side of value, the value area high. We don't take any notice of the developing values. So this particular profile is developing at the moment, and this is the value area low, and this is the value area high on the developing profile. But we take no notice of that at all.